Okay, so welcome to the Sunday review. Today, this week, actually, we can see on the Forex Factory calendar, we've got quite a bit of red news, right? A lot of red folders this week. So we are into the month of December. This is the end of the year, where generally at the end of the year, lots of the volume and there's a lot less volatility, so there's a lot more ranging, a lot more kind of like sporadic moves, right? As we head into like Christmas time and the New Year's, when the markets kind of die down and there's not a whole lot of activity. So, having said that, we can see that this week is actually going to be, there's going to be a lot of economic events going on, right? You can see from the red folders. Lots and lots of red folders. So, we might see a lot of volatility, but it might also show itself in the form of lots of kind of spikes, lots of whip saws back and forth, and lots of just kind of not really ideal trading conditions. All right, so let's take a look what we have this week. So Monday we don't really have anything for in terms of high impact. So there's probably nothing to worry about there. But Tuesday we've got CPI. Okay, and we've also got claim account change for GBP and looks like core CPI and yeah, CPI, that's it. Now, lately CPI has been, really, really volatile. So, in the past we would, expect things like NFP or FOMC to really, give us volatility and big moves on the chart. But recently, in the last few months, and just coming up to every CPI that we've had, CPI has been pretty volatile. It's been showing us really, really big moves. So I would not discount this. Of course, it's a red folder, but I wouldn't discount this at all. I think that we will probably see some big moves from this on Tuesday. So CPI is the first one. That's going to be Tuesday. Wednesday, we've got FOMC. Okay, so we just came off of NFP last week on Friday. We got FOMC this week on Wednesday. On top of that, we've got a couple other red folders in between here. So we got core PPI and PPI for USD, another GBP folder for GDP, and then we have FOMC. So this comes with the press conference after the release, okay, at 2:30. So obviously we'd expect some volatility from this as well. Then Thursday, we've got GBP official bank rate and MPC bank rate votes, right? Monetary policy summary. And then EU, we've got main refinancing rate monetary policy summary. So, I mean, this week is just stacked with like the highest of high impact news, right? So just probably going to be, a bunch of landmines that you're going to sidestep and just be careful with your trading, right? Aside from that, USD, we've got, let's see, core retail sales, unemployment claims, and then we've got the ECB press conference, of course, after the main refinancing rate. So there's a lot that we have to worry about. Then rounding out the week on Friday, we've got all of the flash manufacturing, flash services, and the PMI news, right? And that's for Euro and for GBP, right? And so usually that also brings quite a bit of volatility. Now, when we have a lot of red folders like this kind of stacked all together inside of a week, okay, now normally we would expect each of these events to be like really, really big news events that moves price, all over the place on the charts. But usually when we have a lot of them stacked together in the same week, we tend to see one or maybe two of them, move a lot more than the rest because it doesn't really, it doesn't move all of them at once, when we have all of them in the same week. So we might see, CPI do something big, and then we might see FOMC do, not that much. And then maybe we might see GBP news do a lot, but then EU news, we don't see really much of that, or vice versa, right? So there could be a lot of, kind of, in sporadic, volatility between all of these folders, but obviously we don't know which one it is, that's going to give us big moves like this. So we kind of have to be careful every single day, because there's red news every single day, except for Monday, right? So really you can kind of relax a bit on Monday, just knowing that the rest of the week is going to set us up for, some potential, red flags and high volatility news. Okay, so that kind of just sets the tone for the week. And just, we're in the month of December, like I said, right? So end of the year, things kind of die down. There's not a lot of volume in the market, and things kind of start to range, and then we get a lot of whipsawing, and like I said, just not really ideal trading conditions, right? So just keep that in mind. All right, let's go on to the charts. Take a look at the trading view charts, and I'm going to share my screen here. As soon as I can get my, okay, and you should see that up right now, right? You guys can see that? Let me know if you don't. Okay, so this is the daily chart for DXY. Now, coming off of last week, we had a big bearish move, right? And we were making our way down towards the bottom end of this range. Okay, we actually saw price react to this area right here, right after taking out this low, and we had a 3-bar swing back to the upside. So we saw price actually give us a pretty decent run to the upside, and we were targeting, possibly the imbalance up here, maybe some highs, internal highs along the way, reaching up to this area, and that's why we have this marked, because we were targeting maybe a move back up to here. Now, obviously, this is a daily chart, so the movement up to there would have been significant, right? So we wouldn't expect really for this to happen within a week, but possibly this week now with all of the high impact news and the volatility around that, we could see price make it up, its way up there, so long as we don't see really any, strong bearish signs. Okay, so what we do see right now is that we do have the bullish retracement still. We did take out this high, even though it was just with a wick. Okay, so even though it wasn't with a wick or with a candle, I'm sorry, it wasn't a break of candle, right? It was still a wick, and we still did make it above there. So you can see after we take out a significant level, we usually get a reaction to the downside, and that's what we got. But the reaction down basically popped right back up the next day. So we had a big move down, and then we came right back up, and we didn't take out the low on the previous day. So it's possible that we just continue up from here, right? And so for right now, I would still label this as bullish, okay? Daily retracement, bullish retracement until we get below this low. That's at 103, looks like 103.27, 26. Okay, and the reason being is that's the low. We saw that big down move, right? And so that big shift and that big momentum to the downside. If we see price now after taking out these highs come back down through this low, we can assume that this is going to be like a stop hunt, right? Or just taking liquidity above the highs and then making its way back down the range, right? So as of right now, it's still bullish, but that changes when we see price go below this level. So let's take a look at the 4-hour, and we'll get a micro zoom in of the range and structure. So generally, what I tend to do is whenever we go down to a time frame, we look at our top down and we do our analysis. We try to identify the range that we're in, right? And the most recent break of structure and where price is likely poised to go next, right? And that's how you find your directional bias using the higher time frames. So our last break of structure, as you can see, was bearish actually, right? So we took out this low here, and then we made this low, the swing low that started to retrace back up. Right now, the last break was here, which means that this high and this low is our current range. Because we didn't break this high yet, right? We're very, very close, but we didn't break it yet. We're still technically inside of this range. So what that means is that, provided, I mean, right now it's so close, right? It's like pretty much right there, but we don't have a candle break yet. And I define a break of structure as a candle body close above the high, okay, and not just a wick, because a wick could constitute just a grab of liquidity and a stop hunt, right? And then it could come right back down. So I need to see a candle body break. I need to see a momentum shift above that that high when it does it, right? So that I know it's actually going to continue to the upside. For right now, we can see that it just barely did it, right? So it's not over it with a body, like I said, but we are seeing some wicks breaking the highs. So technically we did take it with some wicks. Now on a lower time frame, that's probably going to be, candle bodies, but for the sake of this time frame that I'm looking at, okay, the 4-hour, it's not a candle body break yet. So I'm technically still bearish here, right? With the assumption that price could, reject this level and continue down. Okay. Now I don't see that yet. Obviously, it's still, obviously making higher highs and higher lows. So I'm still really, looking for this to continue, right? And break the levels here. So we've got these highs. There's nice liquidity sitting right up here. We've got this OB right here at the top of this range, right? We've got a little small imbalance right here, just above the highs. I like those areas as well. And so at the very least, I could probably assume price wants to move up, here at like 104.40. Okay, and if we do get above the highs and we start to look for liquidity above highs, then we can look to like 104.60 and then look to fill this huge imbalance up here, right? So now we've got a swing low, okay, and we see prices making its way up, right? So this is where we're going to be targeting, right? So just a kind of short-term move for Monday. Right, and see if we can get above those highs, or what happens after we trade into that level, right? Because we could see price continue with a big strong move, or we could see a big rejection, and then we could see price come back down after that, right? So we got to kind of gauge what happens after we trade into this area. So that's for the 4-hour. Let's go to the 15. Okay, so just to recap what I just said, right? The dollar on the daily is still bullish technically. And on the 4-hour, we're also bullish, right? At least for this short-term move right here. And so now back down to the 15. Okay, where are we on the 15? Are we bearish? Are we bullish? So if we look at the 15-minute structure, we have the low all the way down here, and we have the high all the way up here, okay? Same scenario where we have price making it all the way up to the highs and actually taking out the highs with a wick, but not with a candle close. So in this case here, okay, the last break of structure that we had was bearish, okay? And we were tracing back to this, this premium range up here, and we're expecting price to, if we're looking at this as a break of structure, then we're expecting price to hold here, right, with a lower high, and then continue down if we can on the 15-minute. Okay, and so this right now is what we're waiting for to see if it'll do that. Now, if it does do that, we should see a change of character, which we don't actually see yet. So in my case here, or what I'm looking for, is this low or this consolidation here was responsible for the break or for the run above the wick, above the high, I'm sorry. So this low right here would need to be traded through, or at least, this group, this consolidation here would need to be traded through to show me some bearish signs, right? A little bearish momentum. So if this low gets taken at the market open, or we start the week, okay, then I can probably assume that price is going to continue lower, right? And that we won't see price go higher, and this will be a stop hunt. If not, then it'll hold here, right? And then we'll see price go higher, right? And from here, I mean, that's a pretty significant move down, and then a quick move right back up. Okay, so we can see where price kind of ends up here outside of this range. So if it continues up, it breaks, and we see a candle body break and a continuation, then we can look for bullish setup or continuation bullish setups Tuesday onwards. Okay, so at the moment we are in a bullish retracement, right, and expecting price to hold here. If it does, we should see price break this low for a change of character, and then a continuation down. So something like this, right, where we break the level here, and then we'll make another lower high, and then we'll continue down, right, something like that. And then for the move up, obviously we will not see price go below here. This will be the higher low most likely, right? We'll see a higher low formed anywhere in this pocket, and then we should see price continue up. Okay, those are one of two scenarios that I have in for the start of the week, and that will give you the bias, right, to start the week off, and it'll at least give you a direction of trade, Tuesday onward. All right, so that's the DXY. Okay, now we're not trading the DXY. Obviously, it's just it's for directional bias, right? It's giving us a direction for EU, for GU, for the other pairs that you trade. So we're using this as kind of like a barometer to show us the way. So let's go over to EU. Okay, and so on the daily, we can see that we have kind of the opposite of the dollar, right? So we have a swing high that was formed up here after trading into a nice point of interest up around the 110 big figure, right? So when we take out a significant price level like a whole number like 110, 115, 111, in these cases, these are big areas of liquidity, right? Where there's lots of orders and potentially there's lots of manipulation or stop hunting going on, and liquidity needs to fuel moves, right? So when we get to these levels here, we should expect a reaction at those big numbers, and we do, right? In this case, we did. We saw a big reversal at the 110 after taking out the 110, and then we saw price move down, give us a daily change of character, right, and then push further down into this range. Now I'd marked the fill of the imbalance here, right, and also this consolidation because we have potentially a mitigation of the high. And that's currently where we're sitting, right? So this is what we expected from last week's Sunday review, right? And that's what happened basically. And so now we're actually seeing price come down into the area that we had marked or expected to come down. And now we're going to see if we get a follow through, right, or reaction from here and a follow through. So we were in a bullish retracement, okay, after being bearish for a long time. And so, trading back up to a premium inside of this big range after taking out a big figure, right? A reaction at that level is expected. So that's what happened. And now we've got a retracement, right? And so what we're trying to determine is now, is this the lower high, right? That'll continue now down and make the new lower low on this time frame, right? So if we're going to follow the order flow and what price is doing or structure is telling us, then we should see price making the lower low, right, next from this lower high. So if it does that, then we could, potentially see price continue lower this week. Okay, and so let's go down to the 4 hour and see if we can confirm some other things here. For right now, as you can see that we're still bearish, right? We're still moving down the range. We don't really have a bullish confirmation yet, right? So we're going to assume that price is still going to want to continue down, even though we're, trading into a nice point of interest here, and we are seeing a reaction, right? We do see like wicks, bouncing off these areas here, but there isn't a bullish confirmation yet. So I'm not going to assume that price is going to want to turn around here until I see that. So let's go to the 4 hour. Okay, and so I had this marked as a low, right? And you can see we've already traded through that. So I can actually mark this as a break of structure. And this is a break of structure because why? Because we actually got a candle close, right? Not just a wick. So this is a true break of structure, which means that this is potentially going to be a swing low, right? If in fact it is a swing low, then we should see price come back up the range towards this high because that's the range we're in. Okay, and then if we continue bearish, then we should see price make a lower high somewhere over here and then continue down, right? And that's how we should expect price to play out if we're bearish or continue to be bearish. Okay, so that's what I'll look for right now. There's not much to go on here on the 4 hour chart. All we know is that we've broken structure to the downside and we're going to expect a pullback and then a continuation. All right, so let's go to the 15 and let's see if we can get a little bit more clarity on that 15 time frame. All right, so again, what I do is I look for my range, right? I look for my last or my most recent break of structure, and then I try to figure out the range and which direction it should go. So the last break of structure was here. So we broke, it's bearish, right? Because we broke the low. And my range is the previous high, right? And then the potentially this, this low right here, right? So you can see we broke the low and we popped right back up really aggressively. And what is this? This is actually NFP, right? So this happened when NFP came out, and that's the volatility you would expect from, a big high impact folder like NFP, right? So we get this big move down, but then we get this big immediate move right back into the range. Okay, now it doesn't break structure higher, so that still gives us a little bit hope that it's still bearish, right? And you can see like right after that move, it immediately comes back down. However, does not break the low, right? And then kind of just sits in this range. So this is kind of like classic, manipulation from big high impact news. It sits in a range, right? We take out this big level, but then we pop right back up, and then now we're just kind of, back and forth inside of this small range here. So the range I'm looking at is going to be this last high structure and this low, right? Because that was the consolidation or the structure that broke this low here, right? And we've also respected it on the pullback, and then we've come down here. So now I'm just waiting to see what direction it'll trade. Same as the dollar. Like I said, are we going to break below here, or are we going to break above there? That's going to give me my direction for the intraday. And so the same thing applies here, right? If I come back through this high, it's going to be a change of character, and I'm going to expect price to continue to be bullish and go through and take out this high, right? So that'll give me a bullish narrative and a bias of, or the draw above this 108 big figure, right? It looks like 108.20, right? If it respects the high here, okay, so I've got this, OB that's respected, that gave us a reaction, but it didn't follow through. We didn't get a break of the low. So it's not really a strong confirmation there. So if price continues to hold in this kind of, range, this is what it could do, right? Back and forth for God knows how long. And until we get a clean direction or break out of that range, then we don't know really which way it wants to go. And if it does that, okay, so if we do see price just kind of stick inside this range for a long time, then your best bet is going to be just trading within the extremes of the range, right? So looking for smaller time frame buy setups with confirmation, right, inside the discount on the extreme down here, or looking for shorts up here in the extreme premium, right? So that'll be the that's basically what I'm looking for EU there. And so we just need a little bit more information here on the start of the week for us to give us a direction. Okay, intraday direction. So let's go to GU. GU is going to be very similar to EU. They both move pretty similar. In this case here, we can see that we also have a daily 3-bar, confirmed 3-bar as it's moving now down the range. Okay, and things that obviously catches my eye immediately is going to be this big imbalance down here, right? So even if we are going to be bullish, right, and you can see that we're in a bullish uptrend right now, we're making higher highs and higher lows. Even if we are going to continue to be bullish, we would still expect price to pull back down and make some sort of higher low, right, inside of this range. And so this is a nice point of interest for it to do that, right? And so we would expect price to come down here, make some sort of higher low, and then continue the uptrend if it is going to do that. Okay. All right. Question. In this case, why the range does not start from the high identified with the red point? The range, oh, you mean it is. It starts from here, okay, and actually the actual range is this high to this low. So does that make sense? Oh, EU? Going back to, because I'm just using the most recent range that broke the structure, right? The entire structure itself, it is the high, right? So this is the structure, but I'm just using the most recent, so because it's respected this structure here once already. So if it does that again, right, it's likely not going to trade up into here, even though we'd expect it to because of the definition of the range. So I'm just using the most recent reaction and seeing if it'll continue to hold the structure that it's holding. And if it does break, right? So for example, if I do see price go above this range, then I would adjust my range back up to this high. and then look for a possible reaction here. All right. A lot of times, ranges and things like that on the different time frames, it's reactionary. So because you can make assumptions and you can make, guesses, right, as to what you think price is going to do, but it doesn't always do what you think it's going to do, obviously. So you have to be able to kind of adjust based on what you see price doing, right? And so there's, just and taking like what's happening right now in the current situation, right? What do you expect is going to happen right now in this current situation? What are what's the criteria that you're looking for? And if it breaks that set of criteria, then you have to adjust and make, and make it make sense, right, in the higher time frame. And so a lot of times people just kind of focus on just that one 15-minute time frame or 1 hour time frame, and then they forget about what's actually happening on the 4 hour or the daily in the bigger picture, right? So that's kind of what you have to keep in mind. And then how it fits into, the lower time frames. So in this case here, for the dollar, like I said, we would expect price to continue. If it's going to be, continue to be bearish, we would look for it to come down here, right, into this discount area below the 50% area to be bullish. We would expect the higher low to be forming here, right, and then continuing up. Okay, so while we are bullish on the daily, right now we're in a bearish retracement, right? So I'd expect price to continue to move down towards this level here. Until how long? Until I get a bullish, confirmation again back to the upside. And that would be either a bullish change of character or a 3-bar swing that's confirmed bullish, right? Which neither of those have happened. Okay, so if we go down to the 4-hour now, and start to look at 4-hour confirmations. This was the daily. Okay, so same thing, right? I'm going to look at my most recent break and range. So my most recent break was over here, right? And this is my high. We can see that this high then fails to break higher, right? So this is our swing high, and the last break of the range was initiated from this low. So our range actually is this big range like this, okay? So now we've got our M structure, right? We've got a change of character, and price is now moving down the range back down to here. So I'm looking for price to continue down to the discount and also into a point of interest here. I marked this area because this is the last order block basically in the range. And we also got some nice liquidity, like internal lows right here. And there's a little tiny imbalance in front of it as well. So there's lots of confluence and overlap with this point of interest. And you can see that when we do trade down into that level, we get a nice reaction, right? Even though it's not particularly strong reaction, but we do get a wick and a bounce back up, right? On the 4-hour, it shows as a wick. On lower time frames, you'll see this as, a set of railroad tracks or something, like a strong move back up. So we do get a reaction here. Right now, on this time frame, for it to be relevant, it would have to give me a bullish change of character, right? So I need to see price come back over this high, basically, right, to make it really worth noting. Because otherwise, since we're bearish, we would expect price to do this, right? This would be making lower lows and lower highs. So really this reaction right here, we would expect it to come, maybe to here, make a lower high, and then continue down the range because we're bearish, right? If it does, in fact, come back up, right, and give me a change of character, meaning it does break an internal high, then there's a possibility from that point on that that's going to be a reversal that takes price higher, right? But until we get that, right, then this is possible. But until we get that, it's bearish, right? Or it's still bearish. So I'm going to assume that price is going to continue in the bearish structure. And this retracement here, we can expect price to pull back into maybe this range right here. All right, so that's the 4. Let's go to the 15. All right, and we can see here the NFP move on GU as well. Pretty much the same looking move we saw on EU as well. So let's take a look at our 15-minute range once again. All right, so 15-minute range break, the last break was here, and then the pullback. Okay, so our range, our full range is this high to this low, okay? And we would expect price, since we broke the low here, we'd expect price to continue down, right? And so once we break a low and we pull back, we want it to pull back into, a point of interest up here. So we've got, doesn't look like much. Actually, I don't think I see anything that sticks out to me. The extreme itself is always going to be a nice point of interest if it does make it all the way up there, right? Take the very extreme of the high above these kind of like equal highs up here in Asia, or this big consolidation. Okay, that's a nice point of interest if it makes it up there. It doesn't necessarily have to, right? If it is bearish, it may not make it up there. So I'm sorry, look that up. Okay. So we would, look for price to maybe give us another, reaction somewhere in this region, right? We could look for a reaction at this high, um, or something like up to that effect. But how do we know when we get the reaction? Well, we're going to see price do, something, a smaller time frame change of character, basically. So when we get a reaction, we're going to see price move up into this range. It'll, make a swing high, and then it'll come down, right? Maybe it'll move up one more time, but then we'll see price give us an internal break below a low, right? And then it'll give us a change of character below, and then we can look to make a lower high and then the continuation down. Okay, so we want to see where price reacts to here first, because we don't really know which point of interest it's going to be. I could mark, any one of these OBs, they'd all be valid. But we want to see the actual reaction to the point of interest, right? That's what's important. When you see price give us a reaction and then the change of character or the shift, right? When we see a big, momentum bar to the downside after taking, a point of interest that we're expecting it to react from, that's when we look for the setup, right? And we want that to happen, right? Ideally, we want that to happen either in London Open or New York Open, okay? So those are the two times that we would expect price to form the setup. So you see, like over here on Friday when NFP happened, obviously NFP happens in New York Open, right? And that's when the volatility comes in, and that's when things move. So obviously that's when the setup happens and we get this big move like this, right? Now on a non-news day, it's not going to be this exaggerated, of course, right? But normally that's when you'd expect price to give you those setups, is when those open times happen, right? So London Open, New York Open, and in some cases the London close, which is right at the end of the New York session, right? So this is like around 1, 2 p.m. This is going to be like, between 7 and 10 a.m. Eastern time, 11 Eastern time. And then this is going to be like 2 in the morning to 4 or 5 in the morning Eastern time, right? And then these are the times that you look for the setups. So you want to see these, these signatures, right? These confirmations that you're looking for. Price takes liquidity above some sort of level, right? Then it gives you a reaction, a strong reaction, a shift down, right? That leaves an imbalance or leaves something, that tells you that price has moved away from this area aggressively. That's the footprint, right? And then you look for the setup back into that pocket, and then the short, right? In this case would be a short. Obviously, you just flip it around for a buy if it's bullish. Okay, so that's what we can look for GU. Let's go to gold. All right. So last week, I mean, hopefully you guys were able to capture some of this gold nonsense. It was ridiculous, right? So they went up to like 21, almost to 2150, right? We had a nice big move up, and we expected this to happen. Or I told you guys that this was, my expectation was that we were going to see price make all-time highs on gold. I just didn't expect it to happen, this soon. I was expecting it to happen, after the new year and into the first quarter, but we saw it happen now. So now that we have that, okay, and obviously once we take a significant level, especially when we have areas like, significant all-time highs, right, where we've never seen gold, go up into, we expect a big reaction from that, right? And so you can see here from this point, the high that it made, it was like just shy of 2150. We came all the way back down here to like back down to 2000, right? So to put that in perspective, that's like 1,500 pips, right? 1,500 pip move back down after we had reached that milestone. So kind of riding off of that momentum, right, into the downside, we would expect this to continue. And if this is the range, right, if that's the low and that's the high, okay, that it's normal, right? After we take out a big level, we expect it to pull back. And now it's pulled back below the 50% level. So we're into ranges where we would expect price to now maybe continue moving up if it does. So I had marked the first OB here as potential reaction, which we did get a reaction, but it's not that strong. So we could still see price move down lower, right? And so that's where we're gonna continue to look for price to move lower, follow the order flow, look at the big rejection, right? There's no sign of bullishness just yet. Okay, so we just assume price is going to continue down the range. So we'll look for the next point of interest down here, probably the OB down here, and the low, which is just below 1966. Okay, so let's go to the 4-hour and we can see how that has played out. Right, so the first clue that we were going to see price continue lower was that after we got this big rejection on the 4-hour, we see immediately that we get this change of character here, right? Price breaks that low, that internal low that pushed priced up to this high, right? And then we get this big shift down below after making that high, right? So we get the change of character there, and then this little reaction that push price up the range fails to push higher, right? So you can see how weak the pullback was after the big move down. Did not get the bullish change of character. That was what I was denoting here, is if we were going to see price continue up, right, or continue to be bullish, then we should have seen price make it above this high, which we didn't, right? It fell short, and then we saw the big reaction back down, and then we took out another low, right? So now we're going to continue down the range. We're going to assume price is going to follow the order flow, right? So this is what we're seeing currently. Lower low, lower high, lower low. And so now we were going to expect something around here. We don't see a swing low yet, so we could still go lower. But if it does make a swing low, then yeah, we would expect price to come back over here somewhere, make a lower high, and then continue, right? That's the expectation. So you kind of want to have at least a picture in your head, an idea of what structure is going to do, right? That's how you can at least plan out your trade or map out your direction. So first we need to see a swing low here, and then it needs to pull back, right? Then we can look for a retracement to this region here and then look for a short. And so this way you can play it both directions. You can look for the buy when it makes the swing low, and you can expect it to trade back into here. And then after that, you can look for the short and the continuation, right? So you can play both directions if you are nimble enough with it. And it's a 4-hour, so there's plenty of room to work with within the range here to catch both sides, right? Now, I wouldn't advise, this week is like kind of like I said with the red news, it's like a landmine, right? This week. So it's kind of up and down. So it's up in the air. And with how volatile gold usually is, when we throw in red news to the mix, I mean, there's just times when this pair moves like crazy, right? So you just want to be careful trading through the red news, especially when we have red news basically every single day, that can affect this, right? So the push down here, okay, is effectively we're looking for a swing low to form. Now, how would we know if a swing low forms here on the 4-hour? Well, we can look down on the 15, right, and then look for a change of character on the 15, right? That'll at least give us a heads up that the 4-hour low has formed, and then we can look for a pullback. So let's look at the 15. Okay, so obviously you can see that we had a break of structure here, right? From the low on the 15, that's our high, okay? And this potentially now is our low. We don't have a change of character yet, right? But if it does break this high, then that's potentially where we could see price, reverse, or that'll be the swing low where it reverses. So right now, let me just mark this high. Okay, this is the high that I'm looking for to break if this is going to be the higher low that holds and continues up, right? Otherwise, what we're in now is in bearish order flow, right? So we're going to be expecting price to continue that. So there's the lower low, lower high, lower low. So what should price logically do? If it follows structure, it should make a lower high here and then continue down, right? Only only when we see price do this, that's when we can start to consider, okay, we're maybe turning around now, right? And now we can look to see for, possible bullish setups and continuations back up. Okay, so that's what we can look for gold. You want to be careful, like I said, with the red news. And for gold and also NASDAQ that I'm going to cover next, you want to make sure that you're looking for predominantly setups in the New York session. Okay, it's not to say that setups won't happen in London, right, or even Asia for that matter. But for these pairs like commodities and indices, okay, so if you're trading like silver, oil, S&P, right? Any other pairs like that, those pairs are going to move in the New York session, right? Because that's when the volatility happens, and that's when the most volume of the market is and most trading activity is happening. It's happening in the New York session. That's why you're going to get the biggest moves at those times. So you want to be looking for those setups predominantly in the New York session, in the New York Open. And you can see this evidence, right, where the blue is, right? That's where you can see where the most activity happens on gold. All right, so if we do get a setup or you do get a trade setup that happens, look for it in the New York session, right, as opposed to London or Asia. Because usually what happens is London and Asia creates the liquidity for New York to run, right? So you might get a setup in London, but then you find that you get stopped out in New York, right? Because you end up being the liquidity for the New York move. Okay, let's go over to NASDAQ next. All right, now NASDAQ on the daily, right? As you can see, we've been bullish. Okay, we had a bearish retracement, which then continued back bullish, right? So we're very bullish on NASDAQ, and I would expect this to continue to go higher, but we're, forming some semblance of swing high here. Okay, now we do have a 3-bar, well, we did have a 3-bar swing to the downside, okay, which we had, some movement, right? Not too bad. But we just traded into this imbalance here, and then we saw another reaction back up, and now we've got a 3-bar swing back to the upside. So this is really, it's not to say that I'm favoring one direction or the other. If I had to pick a direction, I would say bullish, right? Because of how bullish it is. But it could very well form still. It could still respect the high here and still consolidate or still just mess around in this region and not do anything. Or it could also reverse. And that could be the high, and we could see it move down, right? So I don't really know for sure where it's deciding to go yet. But if I had to pick a direction, I would say it's still going to be bullish. Okay, this level right here is kind of acting like a stop hunt, or we sweep the lows here into like a point of interest, or in this case, the imbalance, and then we see a reaction, right? The reaction isn't very strong, which is why I'm not completely sold on it just yet. If it was a strong reaction where we actually see a bullish imbalance and price making its way up towards this high here a little bit closer, then I could make a stronger case for it being bullish. But if it's not, it could just consolidate. And because we have so many red folders this month or this week, there's a good chance that price maybe just will stay inside of a nasty range. Okay, so just be careful with that. Now on the 4-hour, let's go down to the 4. Okay, so you can see how kind of wishy-washy this has been. The 4-hour range high is up here. My last break was over here. So this is actually a huge kind of range if I'm looking at it in terms of, this high and this low. So I'm just going to pick the most recent point right below, which is right here. Okay, this low and this high, right? Because you can see that this low was actually traded through, but we did so with a wick. Okay, so this is kind of like a stop hunt below the level, right, on manipulation. You can see the follow through here obviously was also bullish since we didn't take the low. We continued and made the higher low here, right? And then you can see price makes another successive higher low and then another one, right? So the internal order flow right now is bullish, and it's showing me that it's still bullish, and we don't have any, evidence of bearishness just yet. So the high here is where the first kind of chance it could do something like that will happen. So if it is bearish at this point here, we'll see price reject this high, and it'll form a lower high and continue down, right? It'll give us a bearish change of character, and then we'll see something like this, right? And then this will be the swing high that reverses, and we should see a bigger move down the range, right? With all of the news, this week, it's tough to tell if that's going to be the case, but that can be a scenario for or case for this being the high, the peak formation, and the trading away from it. If we're going to continue with this current order flow and the structure, which is bullish, right, then, we would expect price to continue up, right? So it's making higher highs, higher low, higher high, higher low, right? So what's the next logical move? Through and making another higher high, right? So that we can make a higher low and then continue up. Okay, so that's on the 4 hour, right? And those are the two scenarios we can look for. So now really, I would still expect it to trade up into here, right? Or give me a reaction here. So I'm still looking for it to be a little bit more bullish, right? Before we get something to happen bearishly, or if we just go straight through the high. Okay, and we're coming off of this big move here, which is actually a pretty strong move, in case, it was off of NFP, right? So we had a fast down movement and then a quick move right back up. Right? So it looks pretty bullish to me at the moment. If we go to the 15-minute, we can see the 15-minute range once again. Okay, you can see the last break of structure here, right? Then we formed the high, it pulled back into the OB here, right, in the middle of this range. And then we got this big reaction from NFP, and then this big push up, right? And then we get another break of structure. Now we don't have a real, definitive swing high yet. I don't really want to call this the swing high just yet, even though it could be. But we could see price just go straight up from here, right? At the start of the week, and we open the week, we could gap upwards. We could just make a bullish run right out of the gate upwards and never see it come down anywhere near these lows, right? Or this area. Even though if this was the swing high, that's what we want to see, right? We want to see price come down like this and do something like this and then go bullish, right? Or if it was bearish, just, this is the M structure and we want to see it come down from here, right? So those are obviously the ideal scenarios we want to see happen, but we don't know at the start of the market open what price will do, right? We could, like I said, we could gap up, right? And then we could just see price go up from there and just take off. That could also happen. So I want to see what price will do, but just based off of this, right, we can see that price is bullish. And since we did get a pretty strong move above the high, we can assume that price wants to go higher, right? Now, if I just take the most recent range that it's currently in, like this low to this high, then this low to this high, right? So I could probably look logically for price to come back at least into here, and then maybe trade up higher from there, right? If it's going to be bearish, then we should see it take out this low, right? This low I guess, would be sufficient enough to give us a change of character. But really, I'm looking for this low to be broken because that was the strong reaction, right? That was the NFP low or the NFP manipulation wick. And if it breaks that, then I know that it's going to be, most likely bearish because once they, once they make a move like this, it's really strong. This is kind of like a sweep of liquidity or a big grab of, some kind of orders down there, right? And then they move away really quickly. If they come right back down to this area, then that means that this wasn't really a very significant area. It wasn't important, or they already did what they needed to do up here, right? And they're most likely turning around now and going. Okay, so this will be a turning point for me to be bearish if it does break this level, but otherwise I would just assume price continues to be bullish from here and continue up the range. All right, so that is NASDAQ, and that is pretty much the rundown for this week. So there's a pretty, common theme throughout, right? Which is that, this week we have a lot of red news. Okay, you want to be careful with how you approach, the market after Monday, right? Because after Monday, then all the red folders start to line up, right? So, see what Monday does. Monday should give us a pretty good direction, right? Or idea of the direction, and based on the ranges that I showed you here, where it breaks through or where it doesn't hold, or then we can kind of make a better assessment as to which direction to trade to start the week off. All right, so I will open the floor for any questions. Does anyone have any questions they want to ask? Anyone? Nope. Okay. All right. So, if anything, that I went over today went over your head, or you feel like you have, questions afterwards, sometimes you might have a question that you think of afterwards. Feel free to message me on Telegram, or send an email to me. That's completely fine as well. I'm always open, to answer questions if you have them. I would encourage you guys to also join up our free membership, right? If you look at our website, fxmindshift.com, if you guys aren't free members already, definitely take advantage of the free videos and resources in there. And if you guys want to learn, how to, read the charts like this, or take, or how to take the setups that I'm kind of explaining to you guys, or showing you guys here on these weekly lives, um, you know, take a look at our VIPs, right? Our memberships. And you guys will learn basically how to look for the setups, what to look for in terms of confirmations, right? And actually how to execute the trades that I'm going over with you guys. I do this for the members every week, right? So throughout the week, every day. So what you're getting on the Sunday reviews here as free members, you'd get this every day as a VIP, right? And I do this for the London session, and I map out the day for you guys, and just basically show you what I expect to happen, and the setups, right, that should occur. Obviously, I'm not always 100%, but I have a pretty good track record, I would say. So if you guys are interested in that, definitely check it out. All right. Okay.
Yeah, a good week to film.
What's that?
It looks like a good week to film.
Yeah. Okay. So yeah, last call. Any other questions before we call it a day?
Yes, Jeff. I have a question.
Sure.
I see that there's is that an indicator that you're using? That the circle one with the reddish or pinkish?
The circle, like this?
Yes, that one
No, it's just a highlighter. It's just a
with the
dot.
highlighter.
Yeah, it's just a red dot. It's not an
Okay.
indicator.
So let's say I'm interested in joining the VIP, but I don't have the necessary funds yet, but I am willing, like I would like to join. So what's the available options for people like me?
Well, I would say for right now, I've definitely joined as a free member, right? And obviously free is affordable. And you can take advantage of these weekly lives that I do, right? And as you build up enough funds to do so, then I would encourage you to take a look at the options there. Over the holidays, at the end of the year, I usually run also different promotions, and so things will get cheaper, and there's other offers that I do at the end of the year, so you might have a chance to get in at a cheaper price. It's not going to be as deep a discount as the Black Friday, Cyber Monday discount was, but I'll probably offer something pretty close to that, so you have opportunities.
Okay, thanks a lot.
No problem. Awesome.
I got a question. Is US 30 the same as NASDAQ setups?
Yeah, so US 30 and also US 500, right? I think those are the trifecta, right? Those three will move pretty similarly, and the structure you'll see is also kind of very closely related as well. So what happens on Nasdaq will, it'll be very, very closely related to what happens on like US 30 and US 500. So yeah, what I went through here, you'll see very, very similar moves for those other two.
Okay, thank you.
Which position size calculator to use for NAS 100? My FX book doesn't show. Oh, and that's going to depend on your broker because some brokers list it with, like a lot size will be 0.1. Some list it as, 0.01. So it depends on the broker and what they use. So you have to kind of probably ask your broker support and see what they define as a lot size, and then you can figure it out from there. But it's a little bit, yeah, it's it's difficult sometimes with the indices because it's not always consistent across broker platforms. Yep, you're welcome. Okay, so let me stop the recording here.